Okay, it sounds like we have a couple of attendees rolling on. Welcome, everybody. Just going to wait a couple minutes, give folks time to log on.
My video is not working yet.
Okay.
You might have to.
Yeah, I'm not sure. There's probably an option somewhere, but not from my end to start your video.
Okay, let me see if I can. Huh. View options. Maybe only the speaker is on video. Is that possible?
It could be. This is our first one, so we are learning as we go.
Because Marcus is blocked as not visible. I'm going to go to my video settings and make sure it's set up.
Okay.
I like that. Touch up my appearance. I like that. I could use that.
I think we have quite a few folks on. Maybe we can get started, Vince. So I want to thank everyone for joining us today. We're fortunate to have Vince Calicia from Amagi Bank here with us today. We'll be talking about the Paycheck Protection Program. That's the SBA loan program for small businesses across the country. Just got released on Friday, so there's been a lot of questions that we've had from a lot of our clients. And based on a lot of those conversations, we wanted to host a webinar, not only to educate folks, but also to take questions on, with someone who's on the front lines of really dispersing all these funds, like Vince. So Vince, the way we're going to do this is Vince is going to go through a couple of slides on the program. I'll wrap it up, and then we'll open it up for Q&A and take people's questions at the end of the session. So Vince, let me hand it over to you.
Okay.
All right, you should have.
All right. Very good. Can you all hear me okay?
We can hear you good.
Good. Okay. Let me make the screen bigger so we can all see it. There we go. Okay. Well, hello, everybody. My name is Vince Calicia, and I am with Amagi Bank of Texas. I don't know if you can see my video. Not sure that's working, but if you can hear me, I think that's probably better because I don't look too good these days. We've all been hunkering down in our houses. So I work for Amagi Bank in the Woodlands, Texas, which is north of Houston. And I'm a business banker here, so I'm used to dealing with small businesses. Most of the businesses that I deal with are startups up to about 20 million in sales. Our bank does larger customers than that, but that's kind of my wheelhouse. I have been in the SBA world. Well, I've been in banking for 30 years, but I've been 25 years, I've been doing SBA lending. I've actually managed some SBA lending departments as well, and I've been president of a local association of SBA lenders. So I have a lot of background in SBA, which in this environment is probably an asset, especially given that the program is centered around the flagship product, the SBA 7A. And also, I've been through a number of these crises we've had since I got into banking 30 years ago. And we've had disaster programs set up for a variety of them after 9/11, in 2008, 2009. And then a lot of banks, obviously, depending where you are geographically, you're impacted by local disasters. Most recently we had Hurricane Harvey in Houston, and so the disaster program through the SBA was used at that time also. But nothing compares to this. I tell my friends that and my customers, I said, imagine a hurricane hits and think about all of the impacts on homes and small businesses. And that's just usually in a portion of a state, right? If a hurricane hits Texas, you're worried about Galveston or Corpus Christi or a couple of the cities on the coastline. But if you're in El Paso or if you're in Lubbock, you're not really affected. But this affects the entire state. Well, so just imagine, this is like 50 hurricanes hitting, deep in the heart of every state. So this is crazy. This has never happened before. And so with this disaster situation, the SBA's normal route of being able to provide disaster assistance was just not going to work. And it was pretty clear from the beginning that the banks were going to have to assist the government in providing disaster funding. Amagi is a Houston bank. We've been in business for 29 plus years. We're part of Zion's Bank, which is Zion's Bank Corporation, which is out of Utah. And so we've got, gotta go back to that. So we've got operations in California, Nevada, Colorado, Washington, Arizona, Idaho, places like that. And so we're seeing it on a national basis. And so what we've had to do as a bank, like a lot of banks, is we had to make a decision: are we going to participate in the Paycheck protection program or not? And we wanted to from the very beginning. We wanted to be a part of the program. We have over 220,000 business customers in the collection of banks that we have of small business customers. So at a minimum, we wanted to be able to provide this Paycheck protection program to our customers to help them out. But we didn't want to be the type of bank that would say no to non-customers. And so we kind of look at this as an opportunity to help small businesses that maybe don't have a bank, but are looking at maybe switching banks and coming over to us if it makes sense. So we have not closed the door on businesses that are don't bank with us. The process is a little more challenging, and I'll get into that maybe a little bit later if we have time. So let's kind of jump into what the program is, and I want to keep an eye out on time here. All righty. So we call it the PPP program. It's just easier for short. The PPP program was added to the flagship SBA 7A program. And unlike other disasters, this time the government is not going to guarantee 90%, but actually guarantee 100% of the loans that are provided. And this was done to give the banks comfort to be able to make these loans without having to do a lot of underwriting. Because with underwriting, it takes time, and people don't have a lot of time to get this money. They need it now. And if we were sitting around thinking about whether this company is, their credit is good or they have good character and all these things that we typically look at, collateral, I think that the program would take forever to get really out there. So the banks basically have made a decision to participate. The ones that did make a decision to participate had to figure out a way to do it. Getting back to the program itself, one of the other unique aspects of this program is that there's a forgiveness component to it, meaning that if you meet the qualifications to borrow the money and you use the money as intended, and you can document that you did at the end, that the loan could be forgiven up to 100% of what you borrowed. Now, the whole intent of this program is to help people maintain their jobs. It's good for the country. It's good for the small business. It's great for the small business because they don't have to worry about losing their staff. They don't have to worry about their staff being affected negatively because of the fact they don't have jobs. It's good for the government because we don't have people in unemployment, and it's just a lot easier to keep people on their staff than to have them lose their job and have to go find jobs again. So from a timing standpoint, the program was rolled out on April 3rd, and it will be good through June 30th or until funds made available are exhausted. So there's a lot of concern out there. Are they going to run out of money? Are they going to run out of money? I was just watching the news earlier, and apparently at the moment, there's $90 billion of the 350 that have been allocated as being claimed. Now, a lot of that funds haven't been actually paid yet, but what happens in the process is that once you've been approved, the bank notifies the SBA, and then there's a process of actually getting those funds approved to be dispersed. But at the moment, it's around 90 billion that has been claimed out of the 350. There is serious conversation about adding another 250 billion to the program. The president is behind that. I think that it won't happen overnight. I think they're going to monitor this pretty closely. But there is a feeling out there that these funds are going to probably have to be replenished to meet more of the needs. I guess I was off by one, but the Congress authorized $349 billion under the program. And number 3 is probably the key point here, is that SBA will allow lenders to rely on certifications of the borrower in order to determine the eligibility of the borrower and the use of the proceeds. That's a big change. By allowing the lenders to rely on the borrower, it takes, like I said earlier, a lot of the underwriting concerns out of the picture. But on the other hand, it also puts a lot of responsibility in the hands of the borrower to follow the rules and to understand the rules. So that's why it's really important to have a circle of trusted advisors around you. It could be your HR person, it could be your accountant, it could be your attorney, and it could be your banker. So just keep that in mind, that at the end of the day, as a small business owner, a lot of this is put on you. Understand the program and to provide the documentation to back what you're certifying. This next slide basically just affirms kind of what I said earlier. So let's go to the next slide. Let's talk about eligibility. So the program was geared for smaller businesses, not large businesses. And normally that's defined as companies that have 500 employees or less. It also includes not just C Corps and S Corps, but sole proprietors, independent contractors, and other self-employed persons. Another thing that was never done before under SBA loans was private nonprofit organizations like churches were allowed. And the reason they did that was the fact that many churches that are out there employ many U.S. citizens, and the idea of those citizens losing out on the benefit of this program, it just wasn't acceptable. So they opened it up to nonprofit organizations. some businesses may have more than 500 employees, but they still are eligible. Hospitality and food industry businesses with more than one location could fall into that category. And so if they had, for example, if they had 50 restaurants, and each restaurant, let's say that 100 restaurants, and each, had more, added up to be more than the 500 total, they're going to look at it on a location level. They're not going to look at it on a global level. So that's some of the accommodations that they made with this bill so that more businesses would apply. By the way, these slides are going to be made available to you by email. So one of the first questions you want to do is find out, am I eligible? So this first page basically talks about the 500 employee or less requirement. The employees that they are looking out for, are going to be, based upon industries. Sometimes there are changes. Some industries actually do have larger size standards than 500. So in the phase where you're trying to determine whether your company is big enough, is not too big for the program, there's actually resources out there on the web that are available for you to research your industry to see if you fit the size standard. We talked a little bit about the churches. Okay, so another key point is that you had to have been in operation as of February 15th of this year. And either it had employees for whom you paid salaries or payroll taxes, or paid independent contractors, which is kind of confusing because later on they say that independent contractors, though you may have hired them and they worked for you, you cannot make your loan to pay them, that they have to apply independently on their own. So if you are an independent contractor, the company that you're working for will not be able to apply for a loan to pay you. You'll have to do that on your own. Okay. All right, there are some straight out things that are not eligible. And obviously, if you are engaged in any activity that's illegal under state or federal law, then it's not an eligible business. So there are some businesses in Colorado that are not eligible, but they may be eligible in state by state law, but they may not be eligible by federal law. And then if you're a household employer, that is not eligible. That would be like housekeepers and whatnot, if you're hiring housekeepers. Okay. There are other requirements, or there are other things that make you ineligible. Any owner of 20% or more of the equity of the applicant is, if they're incarcerated, on probation, on parole, presently subject to an indictment, criminal information, arraignment, or other means which formal criminal charges are brought in any jurisdiction, or have been convicted of a felony within the last 5 years. So there's no exceptions to that rule. And then this fourth one has to do with if you ever defaulted on an SBA or a student loan, or if you're currently delinquent, it spells out the situation that you would not be eligible. Okay, so let's talk about the terms. So the maximum loan amount is 10 million, and the interest rate is 1%, and the term is 2 years. You cannot apply for more than one of these loans. You can only apply one time, and it's all tracked by tax ID number. So SBA is the one tracking this, not the banks. So if you apply at one bank and you apply at another bank, whoever gets to your application first is going to be the one that gets it. And then e-signatures are allowed, and the funds are on a first come, first served basis. Let me just talk about all these now kind of as an overview. 10 million is a big number, and you don't get to choose your number. You have to prove your number. So it's going to be based upon your payroll, solely based on your payroll. The interest rate is almost nothing, next to nothing, and realistically, most companies won't be paying any interest because they're going to get their loan forgiven. And the term of the loan of 2 years, again, if there's any amount of the loan that is not forgiven, you'll have up to 2 years to pay it back. Some banks are doing e-signatures, others are still doing paper applications. Our bank, we're using e-signatures. We're doing DocuSign. And then right now at the moment, we've currently been working with our existing customers. We haven't technically gone public, although on our website, if you went to our website, there's a page that you can actually look at. And if you look at most banks, they've got some kind of page that has information about the disaster and the disaster loan products that are out there. This is not the only one. The SBA also offers what's called the EIDL loan, and that's a different program, and that's run directly through the SBA. That's for probably another webinar. Okay, the first 6 months monthly payments are deferred, but interest will accrue, okay, during that time period. There's not going to be any collateral required, which is very unusual. So it's a completely unsecured loan. There's no personal guarantees. That's really unusual. Most small business lending requires a personal guarantee. The borrower's loan could be forgiven up to 100%. And, all loans will be processed by lenders under a delegated authority. However, the Treasury Secretary has been allowing a lot of banks that previously did not have delegated authority to use the program, like some fintech lenders and just some banks that just never had the access before. And that is because they want to get the funds out to the small business owners. So how to calculate how much okay. And these slides are all provided by the SBA. So this is not Amagi and Zion's definition. This is directly from the SBA. So take your total aggregate payroll costs from the last 12 months for employees who live in the US, okay? Now, there is some debate, and I would recommend you do some additional research on this, because I can't tell you how to calculate it. I can't tell you what the exact right way is, but some companies have been using the last 12 rolling months. Others have been using calendar year 2019. For a lot of small businesses who don't have sophisticated financials, sometimes it's just easier to use 2019. The other thing is that some businesses were impacted a little sooner on the virus. So the last couple of months haven't been as normal, and they started to maybe let people go sooner. Okay. Next part is you subtract any compensation to an employee or independent contractor, which doesn't make sense because you can't use independent contractors. So that's kind of a mistake by the SBA there. But any employee that you have paid over 100,000, you would have to take that out of the formula. You can claim their income up to 100,000, but not anything above and beyond that. And that also includes you as the owner. Now, you as the owner, if you pay yourself a wage or a guaranteed payment, those are typically considered acceptable. But if you're taking dividends or distributions, most businesses are not including that in their figure. So basically then you're going to calculate your average monthly payroll costs. Now, in addition to those, which it doesn't state here, but if you read the bill closely, benefits are also considered part of the compensation. The benefits like health insurance and things like of that nature, those things can be considered into the total calculation. So you figure out your average monthly payroll and you multiply that times 2.5 and bingo, you get your loan amount. If you got another disaster loan, like I mentioned, the EIDL loan, you can add that to this so you can use it to pay it off because that loan has a higher interest rate. Okay, so you would get the benefit of the lower interest rate. However, you would have to pay it off potentially a lot sooner. Also on that EIDL loan, which again is a loan that is directly applied for to the SBA, the first $10,000 of that loan is a grant. So you wouldn't necessarily have to pay that part back because that part is not required to be paid back. Okay. So what qualifies as payroll costs? So I kind of mentioned this, gave you a preview of that in the last slide. So this is compensation to any employees in the form of salary, wages, commissions, or similar compensation, but their primary residence of the employees must be in the United States. So if you have workers that come to the United States on visas and you're paying them, but their primary residence is another country, they would not be allowed to be in that calculation. Cash tips and the equivalent, if you have records of them, payment of vacation, parental, family, medical, or sick leave. If you've got documentation of all this, and if you're using a really good PEO firm, intent, you can include that. They'll have good records, and you can include that. There's some other things mentioned here: group health insurance, including premiums, and it would be the premiums that you're paying on behalf of your clients, not their portion. Same thing with the retirement, payment of all taxes, payroll taxes, those items that you're paying on their behalf, not their portion, of course, can all be included in that payroll calculation. This next slide basically reemphasizes that the compensation is not allowed for principal places of residence outside the U.S. The $100,000 max, I think we talked about that a couple times. And the rest of these are kind of not that often. They're important to know, but doesn't affect everybody. Okay. And I noticed someone had maybe a question. I think we're going to get to questions at the end. So I'm going to go ahead and just finish up the presentation and we can kind of get to questions soon. Next section, and probably this is the last component that is very, very important, is how is the borrower's loan forgiven? So the total loan amount that can be forgiven is equal to the following costs incurred over an 8-week period following the date of the loan. All payroll costs. Again, keep really good records. Interest on mortgage obligations incurred on mortgage obligations, and this would be for your business, not personal. These are mortgages that were incurred before February 15th, not the interest that occurred before February 15th. It's kind of worded funny, but so if you have a building loan for your business and you're paying and you made that loan to buy your building last year, any interest that you are paying during this time frame could be part of the calculation for the forgiveness. Or if you own your building, point number 3, then you don't own your building, you're renting, than anything that is your rental payments to your landlord. Again, as long as the lease was dated before the 15th of this year, then any rental payments can be part of the calculation for how much can be forgiven. And finally, same thing with related to utilities of water, electric, gas. Again, these utilities would fall into that calculation, but there is a caveat that 75%, when you add all those expenses up, 75% of it must go towards payroll. So a great example would be, is if you calculated your loan earlier in the exercise of $100,000, when you added up all your costs, payroll plus interest plus rent plus utilities, that the amount that would be forgiven, that would be for everything outside of payroll, could only be $25,000 in that example of a $100,000 loan. The balance of that forgiveness would have to come in the form of payroll. And again, all of this has to be provided by you as the business owner to the bank. Okay. So the bank, what do the banks have to do in terms of loan underwriting? Not a lot, I'll be honest with you. We basically have to get receipt of the borrower certifications. We have to confirm receipt of the information, the documentation that explains your payroll and your staff. We have to confirm that your dollar amount of your average payroll costs is included in the in the package, and that we're asking our customers to provide some type of exhibit that shows how they came up with their figures, kind of a cover sheet. And then basically we have to just make sure that the bars are submitting all the payroll processing records, payroll tax filings. If it's an independent contractor or Schedule C type company, the 1099s. And if you are a Schedule C company, we're asking for a copy of the tax or personal tax return so that we can see your 2019 taxes. If you haven't filed your 2019 taxes, which is probably a majority of the people, then you would have to provide some type of financial statement for your business. It could be on Excel, it could be on QuickBooks, whatever you can use to show your income and expenses. So basically, there's certifications that do need to be made, and I would say that this slide's very, very important, because at the end of the day, the bank's going to make their best effort to make sure you're in compliance with all of these things. But it is really up to the small business owner to make sure that they are, because normally the liability would fall on both the bank and the small business owner, but in this case, it's solely going to be on the small business owner. And so all these are kind of listed here, and we've kind of talked about all of them. But basically, the bottom line is you got to be honest. And there's going to be fraud in this program. I mean, it's happened on every disaster loan program that's been out there. But they will investigate. They're going to sample things. They're going to make sure that that they know that on this particular one, because the lenders just don't have the time to review everything very closely, that that there's going to be some level of fraud out there. So so how is it that we're doing this program and you're not paying any fees and you have a low interest rate? Because why would a bank want to even do that? Well, under normal circumstances, the bank on an SBA loan doesn't charge a origination fee like they do on a normal loan. Normally, a bank on an SBA loan will charge a packaging fee of around $500 to $2,500 on average, somewhere in that range. And the bank will also be able to make money if they sell the loan on the secondary market. But in this situation, the banks aren't charging any kind of packaging fee to the customer. The interest rate that is being charged is 1%, which isn't very much. So what is the incentive for the banks to do this? And are they incented? Do you think they'd be incented? And the answer to that is yes, they're very incented to do it. Beyond the money aspect, I think that at least our bank is that we want to help our communities. I mean, you want to help people. And I mean, if we don't have a healthy business community, then that's not going to help the bank. And so, you know, we're kind of like the second responders. We're definitely not as heroic at all as the first responders, but we just feel like this is our kind of our civic duty is to help out. However, that said, it doesn't hurt that there's a little bit of an incentive provided. And so just so you know, as a taxpayer and U.S. citizen, that the banks are motivated to do these. And so the government, in addition to forgiving the loans, is also providing the bank a fee to do the loans. So there are a lot of banks out there that want to do them. Some have started right away and some took a little while to get going. But there is definitely an economic incentive, as you can see. On loans that are less than $350,000, 5% to a bank isn't too shabby. So it's just the reason it's taken some banks a little bit longer to get going is because depending on the size of your bank, you had to design a system to scale to be able to handle all of that. And this is a program that just got rolled out less than 2 weeks ago. And so a lot of the banks didn't have a retail type of processing system to be able to accept, you know, hundreds of thousands of applications right away. So while some got off to a quicker start, you know, a lot of them are coming online right now. In fact, we just went live last night and we got over 2,000 applications in less than 24 hours. And then we have another 8,000 that are knocking on our door through our website at the moment that want to get started. And our bank, our subsidiary or our division of our bank, we're expecting about 35 to 50,000 applications in our entire bank, our enterprise throughout the country, not just Texas. We have about 220,000 small business customers. Not all of them will apply for a loan. Not all will apply with us, but we may, at the end of the day, have 75 to 100,000 of these loans. So we had to build a system that could handle that. Okay. There will be no upfront fee, guarantee fee though, to the SBA by the borrower. And the rest of these fees have to do with fees that would be charged to a bank, which are normally out there. So, and I also want to give you, this is what the application that the SBA has rolled out looks like. Kind of doesn't fit on one page, but this will be in your presentation. Now, there's a lot of this application has been updated several times. And I only have it in here for informational purposes because here's the deal. About a week ago, people were coming to me saying, hey, I want to apply for this loan. I've already filled out the application. And we told them, just wait a second. I said, first of all, the form isn't even final yet. And then second of all, we may be having our own applications that you don't even need to fill this out. And that's indeed what happened. So for banks that didn't use technology like we did, they went ahead and they issued actual paper applications. What we did on our end is we did an online intake where you go to the website and you put all your information in, and it's all fed into forms, and then those forms are sent to you to be docu-signed. Well, it took a little longer to get that up and running. In the long term, I think it's just easier to do, and you're going to have less mistakes along the way. So I guess that's all I got. I'm going to turn it over to the other guys over here from HRO and let them kind of go through things. I guess I'll give up control of the screen here. How do I do that? Give up remote control. Boom. There you go. But now you take it, buddy.
Well, thank you, Vince. Appreciate that. So, one of the things that we also wanted to let folks know is, we obviously do, payroll and HR services for our clients in addition to employee benefits and insurance. And as the payroll provider for a lot of small and medium-sized businesses out there, we're having conversations daily about what they need to collect. And so we wanted to just provide, 5 of the forms and reports that that we are helping folks collect. And you can see here the Form 941, the TWC report, Form 940, the W-3, and the 1096. And your payroll provider or PEO, if you're with a PEO, should help you in collecting all of this information if they don't have it readily available. So just want people to understand these are some of the forms in addition to what Vince outlined that you'll be needing to collect when applying. The other thing that we wanted to talk through was, a lot of businesses, depending on the industry, are going through a lot of pain. Obviously, if you're a restaurant or a hotel, you're on the front end of this. But across a lot of different sectors, I think really everyone has to, kind of understand 2 different things. The first is, this new normal. How can we pivot as a business and understand, how our customers are changing? How are they doing? And even at HRO internally, we went through this exercise of, reaching out to our customers, understanding how they were doing, trying to see if they were buying differently, and just trying to engage with them and be as helpful as possible. And through that process, one of the things that we realized, kind of forecasting the rest of 2020, is that unfortunately there is going to be a lot of unemployment. This SBA PPP will go a long way in ensuring employees are retained. But even with that and with subsequent legislation, I think every economist and even folks in the administration expect a lot of unemployment. And so to that effect, we've gone through our own process of thinking how we can pivot as a company and understand how we can better serve kind of, the community's needs. We're launching individual health options that are more affordable than the exchange. So that's an example of, as individuals roll off of their employer's health insurance, they will need affordable options, especially as they lose out on that on income. And so that's something that we're rolling out in the next week or 2. And that was a result of us thinking through this process. The second thing is reducing costs across your business. And obviously, whatever actions you take as it relates to employees, make sure you're compliant. I can't tell you how many conversations that we've had, from an HR perspective, on, what does it mean to furlough? How do we do this appropriately? What is this? What do these new laws mean for my business? And so we've helped folks think through that and act appropriately and in a compliant way. And in terms of looking at costs, I think every business owner has to be thinking about how to conserve cash flow. Banks are being, I think, accommodating, and I think landlords are too. And so we're going to have another, I think, webinar on commercial leases and, what it, if your commercial lease, if there are certain clauses that are triggered by a pandemic, or if there are certain negotiation tactics that you can take with your landlord in potentially deferring rent or getting it reduced. And obviously, as someone who helps businesses with health insurance, that's obviously a big topic and a huge expense for businesses. So we're talking about alternative options that business owners can look at for reducing their health insurance costs. So across all those different areas, I think everybody should be thinking about, if they're not already, how they can conserve cash flow. So with that, we'd like to open it up to Q&A. Let me see if we have any questions. I think there is a question here about loan forgiveness. Vince, so just curious about how loan forgiveness will work and if the final guidance has been released. Could you provide any color there?
Sure. So as far as final guidance goes, there's going to be continued guidance, I think, that is going to come out, especially more as it relates to the forgiveness. There's some stuff that's out there already. I think you saw part of it out there. So there is information out there. It's in this presentation with regards to that. But by and large, I think this is how I see it going. Obviously, as an applicant, you've provided your information to determine what your loan amount is. So if you borrowed $100,000 and you were able to justify that amount, when it comes to the point in time that you are going to go to the forgiveness phase, that you're just going to have to collect your information over the last few months for the 8-week period to show that how much money you spent on payroll and then how much you spent on the other eligible types of expenses. And that'll be a submission process, which is probably not something everybody at the banks have formalized yet, because just like this program, getting launched, I mean, it was all put together in a very short time frame. I mean, we didn't have the initial guidance from the SBA until the day before it was supposed to be active. And so most of the focus on the process has been on getting the loans out, getting the application process done, figuring out an underwriting / processing system, and then a funding mechanism. So a lot of effort's been put there. I think the big picture is, at some point in time in the future, the banks will say, hey, your loan is, the forgiveness period is going to, come up. There'll be some kind of communication to you as a borrower. And then at that point, they'll instruct you on what that will be. What that's going to look like, I think it's going to vary. Just like the program varies on how it's delivered and who they deliver it to, I think that's going to vary from bank to bank. I mean, there's going to be some general parameters provided, but by and large, they want to basically see, the SBA wants to see that you use the money to keep your employees.
Right.
And so there'll be some documentation requirements around that.
And so Vince, there's a couple, we have 4 more questions that just came in.
Yeah.
If a company is behind on payroll taxes, can we still apply for a loan?
That's a tricky one. I haven't heard that question. I would imagine it depends on the status of the payroll taxes. If it's, hey, I don't know if they've filed liens or there's any kind of suits going on. I'm not sure what the background on it is. If you're on a payout plan, that would be probably okay. I think that's one that I would probably want to get the contact information for the person who asked the question and maybe research it further. Normally, under a normal situations, I would say that wouldn't be, just because SBA does not typically like taxes to have been unpaid. That said, there could be some mitigating circumstances and some factors that might have to be explained. But remember this, the payroll taxes themselves cannot be a component of the calculation of what you're behind. It has to be based on, so you could, if you used the money to pay them, then you could use it to pay your payroll taxes. The question then really is, are you ineligible because of it? I'd say possibly, but not definitely. I think it requires a little more homework because it's not something that honestly has come up yet, but I'm sure it's going to come up for others. So good question. And if you guys will get me that Aaron's contact information, I'll do a little research on my end and see if I can find out.
So another question is about a husband and wife. They have two businesses, one an LLC, one an S corp, but they're both working on a 1099 basis, and there are no employees. But they do. One does get a W-2 from their S corp.
Okay.
So I imagine the one working as a 1099 for the LLC would probably have to apply as an independent contractor, not as a business, I would assume.
All right. So the S corp, yeah, the S corp they'd file two separate applications. Okay. The S corp would be able to show their W-2 income. That could be how they could calculate their piece. Like I said earlier, distributions would not be allowed. Okay. The
So the W-2,
1099 sold, the individual, the independent contractor, they would have to apply. Basically, what they would do is they would use their personal tax return, and you look at Schedule C, and whatever the bottom line income on Schedule C, that is the amount that they would then show as their income.
Okay.
Or that's effectively, that's like their salary, but it's not, it's not a salary per se, but.
for the S corp, salary could apply now, but for the 1099 for the LLC that is working on a 1099 basis, they're going to need to wait till the 10th and apply as an independent.
In theory, yes. It depends on your bank. I mean, the reality is that the date of application in the mind of the SBA is the day that they get the application, which means electronically. So if you apply with your bank today, they're not electronically going to be ready to submit your application to SBA today. More than likely, as you know, there's long lines to get these loans, and there's thousands of applications. So there's going to be a couple day lag. So I honestly, it's the 8th, 2 days, it's the 10th. I would say check with your bank and find out if they'll take the application now and process it, knowing that in 2 days, it's by the time that they get approved and they submit that application to the SBA, you'll be on that time frame. That's my advice. It just depends on the bank, but I would give it a try just so you can get in there now.
She banks with Amegy, so.
Oh, okay. Well, then have her call me, and then we'll talk about it.
There's another question here that asks if 401k employer contributions count towards compensation. I think I can answer this one. It does. That is a yes. So I think that one's straightforward. Another question is asking about, would you recommend applying for the PPP and the EIDL at the same time?
Yes. I don't see there's a disadvantage. The reason I say that is, and I'm going to give you a little bit of just warning on that. The PPP loan is for payroll, okay? And it's really for a payroll period between February 15th, it's like an 8-week period, right? So 8 weeks of payroll, that's probably the best way to put it. The EIDL loan doesn't have to just be for payroll. So there are going to be other things that you might need money for because of the disaster. The beautiful thing about the EIDL loan is that the first 10,000 of it is a grant. So even if you don't get approved for the amount you were hoping for, if you get approved, say you're hoping to get approved for 50 and you only get approved for 25, the first 10,000 is going to be a grant. That's not repayable. The only thing that you're supposed to certify is that the funds that you used, the EIDL loan, were not the same things you used for on the PPP loan. So that's the big thing. I think it's not like you can't do it. It's just you got to make sure you're not doing something the SBA doesn't want you to do.
Right, and in some ways it may be easier just to apply for the PPP, for instance.
It might be easier, but there are different processes. Like I said, the EIDL, you go directly to the SBA website. It's a lot. I would say, from what my customers have told me, it's a lot more work to go get the EIDL loan because of the way they did the website. But I've heard it's better than it used to be. Because you know, I mean, obviously the SBA has gotten better with their technology too. So I would say take them both very seriously, and then make your own decision. But just make sure you understand what you're agreeing to.
Right. Okay. That makes sense. I think we're gonna leave it there, and I want to.
One more question I see on there, and it's just about the 1099 contractors and how they calculate their profits and losses for the loan.
All right. Well, so if you're a 1099, you're going to probably be filing a Schedule C. So if you're reporting your income as a 1099 employee on your Schedule C, then it's going to be whatever I would just take my annual, now granted, if you've done your 2019 tax return, then you could show your bottom line divided by 12, and that's your average payroll. Okay. But if you don't have a 2019 tax return yet, then what you probably just need to do is you need to do your own P&L, an internal P&L, either on Excel, or if you have QuickBooks and you're using QuickBooks, and just have a 12-month and then divide that bottom line by 12, and that would be your average, and then the loan would then be 2.5 times that.
Okay. Well, thanks again, Vince. I really appreciate your time. We'll be sending out some helpful information to all the participants, as well as contact information for Vince. And we want to thank everybody today for attending. And we'll continue to do more of these webinars that you find useful. If you all do have suggestions for topics that you would like to see covered, please let us know. And other than that, thank you, everybody, and have a wonderful day.
Thank you.